Welcome to Mauuak Saving Tips. I dive into one of today's most important financial challenges: how to boost ESG investments. Using artificial intelligence and see whether AI can truly revolutionize the way we invest responsibly and profitably. Over the past decade, ESG investing has shifted from a niche concept to a core pillar of global investment strategies. In today's market, it's not just about generating financial returns. Investors are increasingly focused on investing in companies that are ethical, sustainable, and socially responsible. ESG investing allows individuals and institutions alike to support businesses that are making a positive impact, combining financial growth with environmental stewardship, fair labor practices, and transparent corporate governance. It's a future-forward approach that aligns money with values. What's driving this shift? One key factor is the growing awareness among investors about the long-term risks of ignoring ESG issues. Climate change, social inequality, and governance failures can all threaten a company's reputation, operations, and profits. At the same time, companies that prioritize ESG are often more resilient, better managed, and more likely to adapt successfully to a rapidly changing world. In fact, studies from major financial institutions like BlackRock and MSCI show that client portfolios can outperform traditional portfolios over time. Moreover, government regulators and global financial institutions are stepping in with stricter ESG disclosure requirements. The EU's Sustainable Finance Disclosure Regulation, the SEC's proposed climate disclosure rules, and global sustainability reporting standards are just a few examples. These policies are shaping the future of investing, making ESG analysis not only a preference, but a necessity. But here's the challenge. How do we accurately evaluate a company's ESG performance? Traditional financial analysis relies on concrete data like earnings, debt, and profit margins. ESG factors, on the other hand, are less tangible and far more complex. They include things like carbon emissions, supply chain ethics, board diversity, employee satisfaction, and more. ESG rating agencies often use different methodologies, and their scores can vary significantly for the same company. Data can be incomplete, outdated, or even misleading. That makes it incredibly difficult for investors to compare companies or assess ESG risks effectively. This is where artificial intelligence becomes a game changer. AI can analyze massive volumes of structured and unstructured data, from sustainability reports and news articles to social media sentiment and satellite imagery. Machine learning models can identify patterns, trends, and red flags that human analysts might miss. Natural language processing tools can sift through thousands of documents to extract relevant ESG insights, helping investors make smarter, faster decisions. AI isn't just reactive, it's predictive. By using historical data and trend modeling, AI can forecast which companies are likely to improve or decline in ESG performance. It can highlight companies with greenwashing behaviors and bring transparency to opaque practices. AI tools can even integrate ESG data into portfolio construction and optimization, helping investors build impact-driven portfolios that align with both financial goals and personal values. Let us take a real-world example. A renewable energy company seeking to optimize its portfolio of solar farms. By leveraging AI, it analyzed production efficiency, weather patterns, grid demand, and maintenance data. The result? A significant increase in energy output, reduced operational costs, and a measurable boost in the company's ESG score. That's not just good for the environment, it's great for business. Similarly, hedge funds and institutional investors are already deploying AI to build ESG models that score companies in real time. These tools help identify supply chain risks, climate vulnerabilities, and even governance concerns, enabling faster, data-backed investment decisions. Platforms like IBM Watson, Arabesque, S-Ray, and Bloomberg ESG AI are leading the charge in this area, providing sophisticated ESG intelligence at scale. Another important aspect is investor engagement. AI can facilitate dialogue between investors and companies, helping shareholders push for better ESG practices based on real data, not just gut feelings. With AI-driven insights, investors can propose concrete actions, track progress over time, and hold companies accountable. The future of ESG investing will be defined by technology. As AI becomes more integrated into investment workflows, ESG will no longer be a box-checking exercise. It will become a dynamic, data-rich decision-making process. AI will empower individual investors, advisors, and fund managers to go beyond surface-level metrics and discover opportunities to drive both returns and impact. We're standing at the intersection of ethics and innovation, finance and future building. Artificial intelligence offers the scale, speed, and precision needed to overcome the barriers that have held ESG investing back for years. It's no longer about choosing between doing well and doing good. You can achieve both. So, the question is, are you ready to be part of the new wave of investors who use smart technology to invest smarter, cleaner, and more ethically? Thanks for watching. I'd love to hear your thoughts on AI's role in ESG investing. Drop a comment below and let us start a conversation. If you're interested in more videos on financial innovation, ethical investing, and wealth strategies for the future, be sure to check out the rest of the channel and subscribe for weekly insights.